Here with me this week is Joe Carlasare. He is a commercial litigator who supports Bitcoin. A lot of his cases focus on Bitcoin, but he's a longtime market active investor. So I want to talk a lot about not just Bitcoin, but also what's happening with the economy. I love following your tweets, Joe. Really interesting because sometimes you're the contrarian in the community. So thanks so much for joining me on the show.
No, it's a pleasure, and thank you for having me on. I really enjoy your podcast, and you bring in a lot of voices and let everybody have their time to make their case, so that's what we're going to do.
Thank you. Well, I'm here to learn. I know I've got a lot to learn from you. So let's start, though, with how did you find Bitcoin? Why are you so passionate about it and focus your legal career on so many cases in this industry?
Yeah, so I've been involved roughly since 2015. I originally had some clients and friends approach me about it. And as most people do, you brush it off and say, oh, that's just magic internet money. It's not going to go anywhere. It's just a joke, a bubble, a scam, whatever. But as I approach things, if you follow me or listen to my takes, is like I try to tear things apart, right? I try to attack it as much as I can. And the frustrating thing I got originally when I first approached Bitcoin is I couldn't undermine it from a technological perspective. It was way beyond my head. I had to study and get up to speed. From an economic perspective, being a longtime student of markets, right, I felt it served a need that was not met. So as I continue to unpack and say why, list all the reasons why this can't work, I invariably was led to a conclusion of, well, wait a second, there are some reasons why it could work. And because of those reasons why it could work from a technological perspective, from an economic and financial perspective, I just started being drawn to it. And as most people do, right, you kind of dip your toe in, you kind of experiment with it, and you kind of have to hold it up against the legacy system. And the way I keep thinking about Bitcoin is I don't try to force it or pigeonhole it into the existing system. I look at it as a totally separate, apart system. Obviously, it's affected from a price standpoint, and that's important for investors allocating capital. But for me, right, it really is an alternative monetary system. It could be something that serves as the basis foundation for a global monetary alternative. And because of that, because of my slow sort of exposure from both clients and friends, and then playing with it myself, I just said, this thing has real legs. It can go far, and nobody knows how far it can go. And I still think it's early days because we're still trying to grapple with what is this thing? What can it be? And we haven't scratched the surface yet.
Do you recall from your journey learning about Bitcoin any type of aha moment that you had where you pivoted from being a skeptic to having this conviction?
Absolutely. So the aha moment for me, and this is why I strongly encourage anybody listening to this who doesn't have Bitcoin exposure, or even people that have had exposure for years to experiment with, is send a transaction, right? Send an on transaction. I don't care if it's $20, $30, $40 fee. It doesn't matter. Just experiment with it. Because to me, when I took that and sent it to an on-chain transaction, sent it to my own wallet, I was experimenting in the early days with even like paper wallets, right? Most Bitcoiners I approach today, they would never do that, right, for security reasons. But when I was doing this and I was saying, this is just like sending an email. No one can stop this transaction. It is incredible. It can flow across the world. Borders are irrelevant. Custody is irrelevant. Possession is relevant. All these issues, you may have heard like the old adage about how possession is 9/10 of the law. You can't ever really possess Bitcoin. That's the thing that's amazing about it. And I've argued this in front of judges. When you think about it, what you hold is a private key. You hold a password to move something on chain for a distributed ledger. And that ledger is the same on my node as it is for your node, as it is for the other 10,000 nodes roughly across the planet. That's not really a possessory asset. That's not something that I can really hold. All I can do is I can send a message, effectively like an email, to the network to communicate that value. So for me, that was the aha moment, right? You're transcending traditional notions of what it means to possess an asset. You're transcending traditional notions of what it means to even transfer an asset. That really clicked for me. The fact that this is really different than everything else we have. The ledger-based money system we currently have, the Eurodollar system, which I've did a lot of study in, even going back to college. I'm like, this is a lot closer to that. Obviously, there's credit issues, but this is a lot closer to that than what most people think of when they think of Bitcoin, which is, they think of it more like the legacy system where it's just a bunch of IOUs transferring back and forth, which is not the case.
Coin Stories is brought to you by Bitdeer, where the power of Bitcoin mining is at your fingertips. As a publicly traded leader, Bitdeer's global reach and scale means they're everywhere you need them to be, ensuring you're part of the thriving Bitcoin economy. Bitdeer's not just mining, they are industry pioneers, and Bitdeer stands alone as the only vertically integrated, technology-focused Bitcoin mining company. What does that mean? Well, they're not just deploying, but developing the latest tech to make Bitcoin mining more efficient and effective. And with the industry's most experienced leadership team, innovation is in their DNA. And it shows. A quarter of their workforce is dedicated to research and development, pushing the boundaries of what's possible in Bitcoin mining. Now they're leveraging years of expertise in data center and cloud management into high performance computing through a recently announced partnership with NVIDIA. Join Bitdeer in reshaping the world of Bitcoin mining. Learn more at bitdeer.com and explore how they are pioneering the future today. Well, a lot of people look at Bitcoin as digital property. Do you see it that way too? Because when you say you can't really possess it, I mean, the
Yeah,
thing that I think about is like bearer instrument. You actually own it.
yeah. I mean, you own it based on the fact that you can exercise, and I've argued this in court. You can exercise your dominion and control over it by virtue of the private key. But the analogy I've always explained it to folks, including judges, is imagine I have a copy of the private key for a Bitcoin on chain, and I copy it, and then I hand it to you, and then I hand it to my buddy Preston. Right? Who owns the Bitcoin? Is it Joe? Is it Natalie? Is it Preston? We all have the same private key, right? We all have the same ability to exercise dominion and control over that ledger entry. Okay. So from a legal standpoint, possession is really important for the law. Where does the Bitcoin reside? Well, the answer is it doesn't reside anywhere, and it also resides everywhere. It's everywhere in the world, right? At any given point, because there's no borders. So that really pushes the boundaries of like conceptually what our mind has to deal with, because we always think about, well, if the bank holds my money, the money is at the bank, right? That's not really how the system works. You know that, right? Because of fractional reserve banking. But it's an easier mental framework to say, yes, the bank is in possession of something, which is really just an IOU for Joe. That's different with a private key. And private key transcends that because it's really just a password.
So interesting. I don't know why I just thought of this, but back in 2016, I was an investigative reporter and I covered, of all things, a lottery dispute story. Someone claimed to have purchased the lottery ticket, but someone else turned it in. And there was a question of who got the lottery winnings, but it was the person who turned it in. It wasn't the person who paid for it. It was whoever held that bearer instrument of the ticket. And I don't know why I thought of that, but it's really interesting to dig into that side of Bitcoin. So I'm assuming there are more and more cases that are coming up. Can you talk a little bit about the types of legal issues that I'm assuming this industry is going to grow more, but what are you seeing?
Of course. I mean, so a lot of the cases I have involve just straight commercial disputes within the mining space, right? A lot of times miners move fast and break things. They're trying to get into the market. They're scrambling to get deals done. They're doing $1 million or 8-figure deals with a handshake, right? Which causes all sorts of problems in litigation. But I have a lot of fascinating ones that are sort of inside those cases where you've got disputes as to possessory rights of Bitcoin, right? If I take your miners and I'm mining on your behalf, providing hosting services, who does that Bitcoin belong to? Who's in control of that wallet? How is it utilized? Those are coming up more and more. And there are real cases I'm working on with issues about possession, right? Because, if you're backing up private keys and you're doing it, depending on the way you're putting it together, putting legal frameworks in place that are enforceable and doing it particularly with multiple jurisdictional analysis where there's different property rights laws, or some cases, very few property rights case law or precedent, that causes a host of problems. The law is all about trying to figure out, different levels of risk and exposure and trying to figure out how to mitigate against those. And from my standpoint, like when you are advising a client and you have to transcend sort of, well, we think this is how a court will interpret it, but we're not sure. That's a big risk for that person, especially if they're putting serious capital to use. So I have a lot of disputes with exchanges, right, where individuals to take the position, you're holding my Bitcoin, right? You are possessing my hard-earned value that I've entrusted with you, and I've kept it with an exchange. The exchange will take a position, no, that's not right. You've basically, we're absolved of all liability. We don't have any, exposure. We have an IOU, but, it's not really an IOU. We can decide when not to rehypothecate your Bitcoin.
Wow.
A lot of issues like that, which I think are going to be problematic for people and exchanges in the future if we don't try to get some sort of clear case law and precedent to guide people.
Well, that's interesting. So do you see us moving forward creating more of a framework, and can you give us your take on the regulatory environment? Because I mean, when you zoom out big picture, it seems like Bitcoin has the most clarity, and it is the
Mhm.
one that is institutional grade, maybe even reserve asset grade for nation states, although we're not moving in that direction quite as much as I wish we were yet. But in terms of just the rule of law and how Bitcoin will fit in, what needs to be done?
Okay, so with Bitcoin in particular, I think the biggest challenge moving forward from a regulatory standpoint is going to be issues related to custody and issues related to lending. Both of those are really core. And you have a lot of guests that come on, they talk about how Bitcoin is going to cannibalize the bond market and Bitcoin is going to eat the financial system. And I agree with that. I think it will increasingly embed itself into the financial system. But you have to remember the heart of the financial system is one where there's collateral, lending, and credit creation, right? And right now, the rules and regulations about bank custody, we saw that with the attempted repeal of SAB 121, and the rules about lending activities and lending and giving credit effectively on Bitcoin, those are opaque, right? There's some guidance as to what can and can't be done. There's issues with auditing, like issues with bigger players concerned about, well, if we're writing loans based on Bitcoin's value, and Bitcoin obviously is a volatile asset, what does that mean for our balance sheet? Our regulators going to scrutinize us unfairly because it's not the preferred asset of treasuries that we're holding. All of those issues need to be carved out. Like I said, if Bitcoin is going to become the heart of the global financial system, or at least not even the heart, but a bigger player, right? It's going to have some lending potential, some pristine collateral qualities that people really want it to have. You need to make that clear for the bigger players that are issuing credit on top of Bitcoin, which there needs to be a lot of clarity on it. There's no way they're going to do it without knowing that they're not going to face regulatory scrutiny. The other regulatory issues, which I think are adjacent to Bitcoin but are important, is this issue with how do you treat stablecoins? How do you treat other digital assets? What is their legal quality? What will it mean to be able to be a regulated broker dealer or clearinghouse in those spaces? And although that's not Bitcoin, right? We all know that the altcoin market has this symbiotic relationship with Bitcoin where it affects its price. It's a main volatility cause of volatility in the Bitcoin market, altcoins, which are extremely volatile. All of that has to get sorted out, I think, for Bitcoin, because regardless of what you and I think about how it's different from all the rest of the junk in crypto, people don't see it that way. The mainstream public cannot distinguish between these two things, at least now.
Yeah. You brought up stable coins, and
Mm-hmm.
you had a very tongue-in-cheek tweet in the last day or so about
Yeah.
former Speaker Paul Ryan,
Yeah.
and not just him, but others who are saying that this could actually help solve our debt crisis, and they provide this ongoing demand for treasuries.
Yeah.
Can you share your take on that?
Sure. So the reason why people make this argument, they ultimately say that, well, we need a source of treasury buying. Okay, which is true, right? There needs to be a new marginal buyer to come to the table. The newest marginal buyer for the last several years for treasuries has actually not been foreigners; it's been Americans. Americans have been loading up on treasuries at higher rates, particularly older folks who have built a really nice nest egg. They can go get their 5% risk free from the government, quote unquote, risk free, right? And that's been a marginal buyer. The big whales in the treasury space have not been buying. Some of the foreign countries that are historic buyers, they have not been buying as much. Some of the pensions, and obviously one of the biggest whales of them all, the Federal Reserve, they've been doing QT. They haven't been actually expanding their balance sheet with respect to the treasury market. So those big whales are sort of not yet feasting on the market for whatever reason. There's a lot of reasons. But the point is, like, let's get a new marginal buyer and let's make it the stablecoin market. Well, if you look at global debt, right? Global debt levels are rising exponentially. I mean, that's well documented. You've had many guests on explain that to your viewers. So listen to Lynn Alden's, listen to any of her work or any of her pieces. She'll explain, the CBO, the Congressional Budget Office's own projections about debt growth are explosive, right? Right now, you're running annually $1.5 trillion approximately of a deficit, meaning that we're spending $1.5 trillion more than we're actually taking in. Okay, so right now the entire global stablecoin market, let's just round up, say it's 158 billion, closer to 200 billion. Let's just say it grows by 10x over the next 5 years. you're not going to have enough additional marginal buying to cover 1 year of the deficit, right? And that market, as it continues to expand, yes, it is another marginal buyer, but it's not going to reach the levels to solve a debt crisis, okay? Now, I, in particular, think this debt can be kicked down the road many, many years for a variety of reasons we can get into if you want to talk about that.
Mhm.
But the point is, like, just look at debt levels, look at, the amazing amount of Treasury issuance that's on its way, and even, massive expansions of the stablecoin market. They're not gonna solve that problem. It may be, the best way to put it, I think, would be there may be some additional buying pressure to service a stablecoin market if there is legislation, but it won't solve the problem of the debt.
Well, I mean, and just because there is demand for our debt inherently doesn't solve the debt, because that means we're issuing more debt, right?
Correct.
That's
Yeah.
that's what I was thinking about.
But you have to remember, right? In a game that we play, right, with this financial this financial system that we currently have, the game we're playing, right, is a relative one. Our position in the world is relative to every other country, which is significantly over indebted. Look at global debt to GDP, right?
Mhm.
Other countries are awash in debt. And anybody listening to this, okay, I highly commend you go, if you haven't had him on already, you should have him on. I would recommend you get Brent Johnson on Santiago Capital of the Dollar Milkshake. Has he been on your podcast at all?
No, but I've had the chance to meet him and talk to him in person, and he's really, really great.
Yeah, he's fantastic, and his work is really good. I'm not going to be able to add anything to really what he's talking about in terms of the milkshake theory, but I'll just tell you my conceptual framework of it. When you're thinking about a relative system and you're thinking about what is the U.S.'s comparative advantage versus everyone else, and you're talking about debt in particular, one fact he likes to talk about, which I think is really core, is that as much as people want to bemoan the U.S. debt problem, $30-odd trillion worth of debt, there's
Mhm.
almost double that. Some estimates are that it's more than double of dollar-based debt outside the United States. Okay. Other countries that owe obligations in dollar
Yeah.
terms outside the United States. And guess what the difference is between those countries and the United States? They don't have access to a money printer, right? So they can't service or massage or tampen down volatility with the money printer like we can, because they can't print dollars. What they can print is yen, yuan, real, other currencies, and those currencies are going to be paying dollars, which is causing demand for dollars. So this is why you constantly see this thing about, well, the dollar is going to hyperinflate, the dollar is going to fall apart. Well, they've printed trillions of dollars, they've expanded and spent all sorts of money, and the dollar is higher today than it was 10 years ago, right? QE1, QE2, all the PPP loans, all the TARP, all the spending, and the dollar on a relative basis versus other fiat currencies is higher. And the one other thing that I think here Bitcoiners talk about all the time is, well, it's just the cleanest dirty shirt. It's just depreciating against other fiat. The thing to remember, though, is that in foreigners in certain countries, okay, if they're holding dollars, it's not just that their US dollars have increased in value versus the native currency. Their US dollars actually buy more goods and services this year than they did last year. And this is really important for people to just conceptualize, right? The dollar, if they were holding it in foreign countries, they actually increased their purchasing power just by holding US dollars. So when Brent talks about this dollar milkshake theory and sucking liquidity from the rest of the world to the benefit of the dollar, that's what he's talking about.
Mhm. Well, obviously, there's still most transactions are conducted in the dollar. Most debt, as you just said, is denominated in owed in the dollar. But over the long run, I mean, if you think about 100-year cycles,
Yeah.
the trajectory is shifting a bit,
Sure.
right?
Yeah.
And we are seeing maybe the US dollar remain as the global reserve currency, but we are shifting away from it as the reserve asset as central banks start to look at other options as well. The petrodollar agreement just ended. So, I mean, do you feel that over the next 100 years, the US dollar will be the king currency as well as reserve asset? Or what do you think about that?
No, I mean, 100 years is a very long time, right? I think it's risky to look out more than 10 years, to be quite honest, because things can change so quickly. But I think the best approach, rather than getting tied into certain hypotheses or certain biases, right? Because I have biases, you have biases, everybody has a bias, right? My bias is pro Bitcoin. Like, I'm very, very passionate about Bitcoin. But one of the things I try to control my bias is try to say, what would be the conditions with which I think dollar hegemony would be really challenged? one of the conditions that would be required is there to be a suitable alternative. There has to be a suitable alternative that people are flocking to and doing huge amounts of economic transactions in, denominating huge amounts of debt in, which is even more important than the actual settlement of the transaction. It's what are you pegging it to? And you don't see the conditions of that. You see, to your point, an erosion, right? You see a shift. You could say the trend is not the dollar's friend, something like that. I mean, that's probably a fair and balanced way of putting it. But these things take a long time to play out. Anybody who thinks that within the next 10 years, suddenly the dollar is just going to evaporate and hyperinflate and things are going to fall apart. My response is maybe, right? But I'm not going to cloud my bias with a certainty, right? I'm not going to say I know for certain that this thing can't go on for another 20, 30 years. And depending on what age you're at, I remember coming of age in the 90s, and I remember reading articles about the downfall of the dollar. The dollar's falling apart. I read that in grade school. There's you can go back and search. There's Newsweek and Business Week and various publications about how the dollar is falling apart. The U.S. has lost its manufacturing base. We're too over indebted. All the stuff we talk about right now, every day on Twitter, where people bemoan, who's going to buy all the treasuries. I heard that in the 90s. Okay, when I was talking to my dad and trying to understand this stuff. So this stuff can take a long time, and can it happen very quickly? Sure. Right. But nobody can tell you with certainty, because we don't have access to the mind of God, like when that's going to happen. So that's my big point. Like, I think these things they're macro glacial movements, and they take forever.
Yeah.
Or at least they seem to take forever.
No, you're right. And 100 years is a long time. I was watching the news coverage the other week about the anniversary of D-Day, and I'm like, I can't believe that happened less than 100 years ago. Think of how much history and how much change. And I mean, that's spanning multiple generations, and it's not even 100 years ago.
Well, and we live in a world, right, where technology is moving so exponentially. I mean, the shift in 10 years in technology has been extreme, right? I remember days before cell phones still. Kids today, I think they'll never have that, right? Same thing with social media, same thing with being able to watch any movie you want or get any fact you want or have ChatGPT write any article you want for you. Those things are like huge, and they're changing, but they're held up against the legacy system. The world I live in, the courts and the system of law, it moves at a snail's pace, right? Yeah. I'll just tell you, in Cook County, Illinois, okay, up until just a couple years ago, when we were drafting court orders after a court appearance, we were using carbon paper, okay? Literally like the tracing paper to write out orders. This is what the judge is saying. And you couldn't even read the handwriting. That's how backwards the system is, because they had signed a 50-year contract with carbon paper to get, the orders made, right? Wow. And the system of government is built to be resistant to change, and it's running up against a system of technology that's changing more than any of us can keep up with.
I ran into some of that when I was a reporter, because when I would try to go get, court cases, legal documents, sometimes it was very, very challenging. I'm like, why isn't this all digital? But you're right. Okay, let's talk about how things move at such a glacial pace. And you mentioned earlier, we can kick the can down the road for a long time. I find that interesting because also related to some of the things you tweet about, I feel like there are two analysts right now in the macro world. Some that say that there's this impending massive crash, deflationary bust. We're going to shift into an entirely new system, and it's going to all come, cascading down. And the other says, no, we're good. We're going to avoid a recession, soft landing. You know what? Actually, S&P might hit 9,000 in the next year. Can you talk to us maybe about both and where you sit in between them?
Yeah, I don't have a crystal ball, okay? But what I do know is that there are certain hallmarks you would see, I think, of the kind of deflationary spiral that a lot of the more bearish folks are forecasting, right? You would have to see significant rises across the board in unemployment. That is a necessary condition. And because of how financialized our economy is, I also think you need to see significant decreases in the prices of assets, right? One of the things we know is that the Federal Reserve and others have consciously targeted a wealth effect to stimulate growth, right? And the idea for folks unfamiliar, and by the way, this isn't like my theory. This is their stated purpose on documents on various, Federal Reserve Bank websites, and research has been done, is that they try to promote asset prices with the idea that if you feel wealthier, Natalie, or if I feel wealthier, I'm going to go out and spend. And when I go out and spend on food, dining, vacations, cars, houses, whatever, that's going to spur consumption, which is going to spur more productivity and spur more growth, rather, and actually cause unemployment to remain low. That's the theory. The theory is if you prop up asset prices and you, in fact, stimulate growth, that prevents some sort of deflationary spiral. This is why for many years they kept interest rates at zero, right? It's because they're trying to spur lending activity, spur growth, spur asset prices, and that will continue to keep this whole ship running, right? The problem I have for the bearish case is that they've effectively told you in many respects that they can't let asset prices fall too much, right? We saw a real crash in the bond market in 2022. That was, Four Sigma event, right? We basically are having some of the worst performance in history, back-to-back years in the bond market. And what did it do? It affected all asset prices. Even though the economy was generally fairly strong in 2022 and 2023, you saw pullbacks across the board, particularly in interest rate sensitive companies, because of the Treasury market selling off and the bond market selling off to respond to the higher rates. But now, what you have effectively, and I'll credit Lynn with this because I think it's the right take, you have pre-stimulus, right? Whereas before we would enter recession, the government spend money and cut rates to try to pull us out of it. They're just effectively spending a ton of money, 6 to 7% of GDP as part of the deficit to stimulate actively, so you don't get that deflationary collapse. So, and you also saw they'll set up targeted surgical approaches for the banking system or other potential issues that fire up. So for the bearish case, where you get this deflationary bust, explain to me what the catalyst is going to be, because it could happen, right? But explain to me what the catalyst is going to be to cause this massive sell-off in real estate, and how in real estate, the commercial real estate space, which is a known. We've been talking about that for over a year. Or the stock market. People are going to wake up one day and they're going to say, I have to dump my stocks across the board in my portfolio. What is that going to be? I struggle really with the amount of government spending that's coming in to sort of forecast that. I guess one thing to play devil's advocate, I could say it could be geopolitical. If there really is some issue that fires up that isn't on people's radar, isn't being factored in geopolitically, that could be a catalyst to cause that sort of thing. But I don't see it in the economy. I think the data of the economy shows that overall things are okay. They're not great. I wouldn't even characterize it as good, right? I think the economy is good for certain people that hold assets that are at all-time highs, but for a lot of other people, they're really struggling. So that's the bearish case. The bullish case, I think, is very clear-cut, right? You've got a lot of government spending. You're going to get a new president, and I don't care if it's Team Red or Team Blue. They're all promising to spend more money. There isn't a single person in Washington that I hear that says we have to practice financial restraint, austerity to cut back. There's going to be more money. So the bull case is very clear. The bull case is inflation is tame, at least using the CPI metrics, it's tame, which means that the Fed can sort of pull its foot off the gas. That's a really clear case. So I think if you had a gun to my head, not having a crystal ball, I'd say that makes a lot more sense.
It's time for a quick break to hear these messages from my partners who make this podcast possible. Next up, Bitcoin 2024, the world's largest Bitcoin conference, is coming to Nashville this July. Join us for 3 amazing days of keynotes, panels, networking events, and my Women of Bitcoin brunch. The Bitcoin conference is where I launched my podcast 3 years ago. You never know what can happen or who you can meet here. Head to b.tc/conference and use the code HODL for 10% off. Next up, Speed Bitcoin Lightning Wallet, one of the fastest growing Bitcoin wallets out there. Speed is a secure, low-cost way to send and receive Bitcoin instantly. It's super simple and scores high user ratings, and you can even use it to shop gift cards of your favorite brands to earn rewards. Download Speed using the QR code on the screen or the link in my show notes. And finally, the why of Bitcoin is easy to grasp, but the how can be so confusing. The Bitcoin Way is a professional Bitcoin IT and security team offering personalized one-on-one support that guides you through cold storage, setting up nodes, inheritance planning, privacy best practices, and more. Don't take my word for it. Take 82-year-old customer bills.
Give the Bitcoin way a try. You will be well on your way to owning and protecting the greatest money ever discovered.
Set up your free 30-minute consultation today. All right, back to the show. Well, I understand why things move slowly because we are in a very complex system that is connected globally. But I guess I just don't understand how we can keep blowing up the bubble this big. And at this point, we've kicked it up to the sovereign level right before something gives, where there is some credit event, some counterparty that can't make their pay. I mean, there's just so much debt in the system. I just don't see how you can keep spending into it without something happening at some point. And what's funny is on the flip side, of course, what are they going to do? They're going to respond by printing. But I guess the risk in that is, when do we hit a point where inflation just gets so high that they can't ignore it in terms of, I mean, not hyperinflation like 50%, but to a point where people are just fleeing and risk is being repriced left and right. I just don't know how this is sustainable and how we can kick the can down the road for forever.
Yeah. Well, forever, again, long time, right? But can we kick down again, I try to not think about what's going to happen 20 years from now. I try to think more about what's happening in the next 5 to 10 years, because the world can change, right? It can change really quickly. And again, I think it's just a healthier way to try to analyze things. Because we
but
don't.
Even in 5, I mean, we've always had significant recessions, and we've had the bull market and then a significant decline for a period, whether it was after the .com bubble, after the housing crash. I mean, aren't we due for one more significant than 2022?
I mean, my personal belief is that a recession would be extremely painful. I don't think we are psychologically equipped as a society to deal with what a real bad recession would be like. Even the financial crisis, right, which we lived through, it was painful, right? But what did the government do? They didn't actually make many people take their medicine. They spent a lot of money, toxic asset reliefs. They bailed out banks. They, spent tons of money to try to pull the country out of the recession. Same thing with the pandemic, right? You saw people that if the country was closed for a few weeks, they were on the food lines. But they were flooded with cash. The problem I have is psychologically, you've created, like a Pavlovian dog, right? You've created, whenever there's pain, you're going to get a handout or some sort of money sent to you. You've set a precedent for stimulus. You set a precedent, I think, for the next recession. I can tell you this: the next recession, which we will get at some point, I will expect massive amounts of stimulus, right? Yeah. Massive government spending. Right. So I don't think we can really, the country psychologically, the United States at least, has the stomach to go through a real painful deleveraging at this point. So that tells me the path is up. Now, to your point, how does it all end, right? The way it ends, I think, is it has to go back to the bond market, the Treasury market. You have to have long end yields blow out, meaning rise high enough that it really causes stress in funding the government, right? That's number one. And also in having people, having investors think long and hard about how much government debt do I want to hold. That's the end. The end game is really, it comes back to the Treasury market. And now the problem for that is that, again, we live in a relative game where there is demand for treasuries to some extent because it is a global reserve asset. And even if there isn't demand, as well as I do, there will be central planners that are going to buy up that paper to absorb it. So I find it hard to believe that you're going to have a funding issue in the Treasury market anytime in the near term. What you can have is you can have rates go much higher. They can push north of 5%, which we've seen 5% seems to be at least a point of turmoil for the bond market where they just can't take the higher rates. And that's an issue. So to your point, like, when does it all end? I think it ends when government debts and deficits are substantially higher than where they're at currently. And when you're having real troubles with that long end of the yield curve, long-term interest rate expectations, not the front end. Because keep in mind, we have an inverted yield curve, right? Which means right now, in the bizarre world we live in, the government can actually borrow at a cheaper rate for long end instruments than short end instruments. Okay, there's a reason for that. That's because bond investors still believe the Fed will conquer inflation right now. But beliefs can change, right? Perception can change very quickly. If that changes, the game changes.
You're making me think of something Cynthia Lummis said in an interview I had with her. I forgot which committee she was sitting on, but she asked, like, at what point is our debt an issue? And the person, I forgot who it was, but they responded, I'm not sure, but we're not there yet. And
Yeah.
that's
Well,
sort of the saying at the federal level.
that's why, like, anybody forget, like, when we're having these conversations and you have guests on, rather than trying to predict the exact timeline, for me, I always think it's interesting to see, tell me what that looks like. Describe what it looks like where the funding and the structural deficits can no longer occur, because that's more helpful, right? If you could say that, then any of your listeners can go read the Wall Street Journal or look at the charts and say, okay, this is really getting problematic. Years ago, people said, well, there's no way the yen could go over 150 relative to the United States dollar. It has, right? So tell me why it can't go over 200 or 250. Tell me what structurally breaks at those levels.
So are you a bull or a bear? I still can't tell. I don't know.
I'm bullish on Bitcoin. I'm bullish on human beings to solve any problem that's in front of them. I am not a doom and gloomer. I'm extremely optimistic about the future. I think that we have incredible times ahead of us. I don't believe in this narrative that we're all going to be, living in caves and the world's going to collapse. I don't believe it, for a variety of reasons. Because number one, I don't think it serves any purpose, and number two, I think human beings can solve any problem. So where I stand right now, I'm extremely positive on Bitcoin. I think Bitcoin has a very bright future. I don't pretend to know the path it's going to take. I'm not a believer in power law or these other models because it's too young of an asset and nobody can tell you where it's going to go from here. What I would say with respect to a macro environment, I think things are going to get far crazier before any sort of significant deleveraging event that people seem to be concerned about for the last several years. And I'll just say, full disclosure, I thought in 2023 we were going to get a recession, right? I thought the interest rate environment was going to be high enough to trigger a recession. I was wrong, because what I and I've said this publicly, what I misidentified was the massive amount of fiscal spending that is embedded into our economy whenever they raise rates. You got to remember, all those higher interest rates, that's someone's income. So if you're a boomer who's built up a huge nest egg and now you're getting effectively free subsidization from the government because you can stick it in a money market and get 5%, that's not that bad, right? They've had a great run. Assets have done incredible. They can take some chips off the table, stick it in a money market account, and see their assets grow at 5% backed by the United States government.
So let's talk a little bit more about Bitcoin and how it's going to integrate into the legacy financial system. Some guests that I've had feel that there is ultimately going to be a limit. Like, they don't believe that Bitcoin can hit 10 million USD per coin, and others are on the flip side. And so I'm just kind of curious, how do you see it moving its way into being maybe more of a core macro asset? Because you said earlier that you do feel it will eat into bonds and real estate and maybe not to the extent of being 50% or more of the entire financial system, but how do you see it?
So my case for Bitcoin is that nobody knows how big it can get. Still, I think it is incredibly small. I think what will primarily drive folks to Bitcoin is the issues I'm talking about with sovereign debt markets, right? There will be bigger players, and I don't mean necessarily nation states. I'm more actually focused on the private sector. I think that there will be commercial banks abroad, mostly, that will recognize there are inherent risks with holding too much government debt. And they will look increasingly to diversify away from government debt to other assets. Maybe some of that is, in fact, gold. I think equities also will play a role in their diversification strategy. And I also think Bitcoin plays a big role. And I'll explain why. So if you look at the birth of the Eurodollar system, which I know you've had guests a couple different times talk about. I think you've had Jeff Snyder on here. Is that right?
No.
Oh, you haven't? Okay. Well, if you look at the birth of the Eurodollar system, right? It grew as an actual decentralized system. It grew because a bunch of dollars flooded into offshore markets. And then in the wake of World War II, with many competitors destroyed, the U.S. being the strongest economy, the U.S. having a massive manufacturing base, a point of relative stability, friendly neighbors, a very strong military that had been built up, they decided this was the debt we want to hold to lend against. We want to have treasuries to be to outside the United States to be held by commercial banks, and we're going to issue dollar-denominated obligations against those treasuries and against other assets. And we're confident in the long-term geopolitical position of the United States, where, as of today, I think the biggest export the United States has to the world is dollars, right? That's been the current thing. Well, how does that relate to Bitcoin? Well, if the underpinning of that market, if the treasury market itself no longer is, again, the trend is against that market, it is no longer in its heydays, right? It is on its way, it's in decline. Let's just put it that way. They're going to look for some other neutral stable, some other neutral basis to hold up against its obligations. And although you need regulatory changes to have it qualify under Basel as a high quality liquid asset, you need some other regulatory changes to come in the way. I think banks would find that very attractive as a part of their portfolio. And that's where the money's at, right? There's an old, they asked a bank robber one time, like, why did you rob the bank? And he said, because that's where the money's at, right? The money in our system is at those commercial banks, which they create majority of capital and credit in the world. We live in a credit system. We don't live in really a fiat system. We live in credit because at the end of the day, banks can create money out of thin air. They don't actually have to have the underlying obligations. And this is really important for people to understand. People tend to look at the world and they see it from the standpoint of the Federal Reserve and the United States government controlling the dollar. But if I'm a foreign bank, Natalie, and I can print dollars, literally, I can issue dollar obligations without regard to anything in the Federal Reserve system.
Right.
How is the Fed at the center of the universe? That's the whole point of the Eurodollar system. They can print money without actually having the money. They don't have to have the treasuries or the cash to say, now you have an obligation or now you have a liability. That's the key to understand. And the Fed does not oversee those foreign institutions. Now, they may backstop it through swap lines and through other intervention foreign, but they're not in control. They're not the center of the financial universe, at least globally.
It's really interesting to think about. I mean, we are sort of in this institutional era of Bitcoin adoption. We are seeing more companies. It's a slow trickle, but I think it will accelerate. Can you share your take on why Bitcoin has been consolidating and its price has not been moving significantly up or down really in the last couple of months when there is more demand? We have these spot Bitcoin ETFs. I mean, there are all-time highs almost every other day in equities, including in the meme stocks. Why not with Bitcoin? Because I recently tweeted about whether Bitcoin's price is being suppressed. There's this basis trade people have been talking about. I had some guests on my show, James Lavish, Luke Roman, Preston. Do you think that Bitcoin's price is being suppressed in any way?
No, I don't. Let's talk about first part of your question. Why is Bitcoin consolidating? I view that as extremely bullish. Right. The fact that you're consolidating in the 60K range, I think is very, I'm very optimistic about it. I don't see that being anything negative at all. You had a ton of hype and momentum coming into the ETFs, right? And people, just the way markets work, I've seen this now for decades. They make moves in advance of the news, right? They move before. And there were many people who suggested, well, you're going to get the ETF launch and it'll be the sell the news event and Bitcoin will crash, et cetera. And there have been periods in the past where that has tended to be true, right? Like the CME futures launch was pretty close to the top in 2017. The Bitcoin futures ETFs in November of 2021, that was fairly close to the top within a few days. And those were both sell the news events. What you've seen here, I think, is you've seen sort of a consolidation around the news, right? People moved in advance of that news breaking, of those products coming to market. Bitcoin actually did really well after the ETFs launched, right? I think we gained $20,000 in price. And then we're hovering up right around historic all-time highs, right? At least nominal highs. I believe that Bitcoin has not really made a new all-time high if you adjust for inflation. By some metrics, Bitcoin's still below that, which is fine, right? At this point, I think, Bitcoin moving forward, it will have more capital, more steady flows from traditional finance. And what I think is happening, and I don't think I know this from talking to some of the individuals that are positioning in the financial sector, is that all of the various firms that are going to be offering Bitcoin products to their various investors, they're trying to figure out how to talk about it, how to allocate in a model portfolio. And that takes a long time. I know that there's a conference happening in August where they're literally going to come together and they're going to talk about, financial advisors about model Bitcoin allocations and should it be 2% or 3% or 5% of someone's portfolio. Yeah. So the point is, these things in TradFi and financial advisors, they're extremely risk adverse. They have one job: don't lose me money. And for them, they want everything documented. They want their rationale spelled out. They don't do it like you and I, where we can just go buy out and smash buy Bitcoin, right? They want to have a model that says, this is what we're going to offer to, X individual who's 35 years old, who has a job, who has 2.5 kids, and that's what they're going to get in their portfolio. That will be built out over the next year, and I expect Bitcoin to do very well. With respect to the basis trade, very quickly, this is not new in Bitcoin. This is true in many markets, many commodities markets, where they're trying to capture that premium between shorting the futures and buying the spot. It's not manipulation by any stretch of the imagination. When you are short the futures, you carry and you hold the spot, right? There's no risk. There's no risk in that trade. You're effectively just capturing that. Yeah. So to me, I don't really see the narrative. I think it's just people get bored and they want to explain why Bitcoin isn't doing what they think it should do. And in reality, if we're ripping towards six figures 6 months from now, nobody's going to remember that this allegation of price suppression that we hear every single time.
Well, and I didn't really look at it as necessarily intentional, like people, like forces are intentionally keeping the price down for their own benefit. I saw it was more so like the arbitrage. I mean, they're capturing that difference and making a risk-free yield on it. And so that is what's just suppressing in terms of the price is not bouncing up, because that's keeping it down. But it's
not going to suppress the price. So if you had but just think of it this way. Say those traders are in there, they're shorting futures and they're buying spot. Just make it real simple for people. If there are 5 more Michael Saylors who want to go put Bitcoin on their balance sheet, do you think the price isn't going to absolutely rip to, $200,000, $300,000? Of course it is. So what does that activity actually do? You got to remember, those folks, they're buying spot, right? They're buying spot Bitcoin, and it's against their short of the futures position. So they're into the spot market, they're into the futures market, and every dealer in the futures market, unless they want to blow up, they have to have a hedge in spot. So this notion that you can just do paper shorts without any underlying access to the asset, any underlying hedge, that is a surefire way to blow up as an institution. And again, I think viewers that will know with GameStop issue, right? That's how funds can blow up. Big players that are playing games, if there is sufficient demand, organic demand for buying, they blow up, and that's the gamma squeeze.
The GameStop has been so crazy to watch.
Yeah.
I want to ask you about Bitcoin self-custody. Do you think that there will be a battle for individuals to be able to custody their Bitcoin, and the government's going to want it to be kind of more regulated and controlled within certain entities, all KYC? I mean, how do you see that playing out?
So I, for one, think globally there will almost be certainly countries that try to pass draconian rules and laws to prevent people from self-custodying Bitcoin. I think in my mental model, I expect it fully. In the United States in particular, I actually want it to happen for selfish reasons, because I personally think that once there is some sort of silly, dumb rule about self-custody where they're trying to ban me from keeping 12 words in my head, I can't wait to bring a constitutional challenge to that, because I don't believe that's constitutional. I think courts in particular will frown upon any sort of restrictions on people keeping information. And so I think that if it were to happen in the United States, ultimately it would be declared unconstitutional. I don't think it's constitutional to bar people from keeping 12 words in their head, which is what you're doing when you're saying, well, you can't have a non-custodial wallet. I think it's kind of a silly term overall. But I guess I wouldn't put it as terribly high on my list of things that I think about when I consider, regulation coming down the line. I think there are far more likely aspects of regulation that could be hostile. I think there's always going to be voices in the government that despise Bitcoin for the foreseeable future. But what I find increasingly encouraging is, look at the news over the last several months. You've got presidential candidates now speaking more favorably about Bitcoin. That is not something that I think you would see if you were facing very harsh regulation or legislation coming down the line. I don't see that at all. I don't know why people would read it otherwise. And I'll just say one final thing on that. There are judges, and I don't think this gets talked about enough. They're not going to be public about it, but there are judges and appellate court justices and folks I know in particular that hold Bitcoin. Okay. If there were legal challenges brought against Bitcoin holders or some sort of challenge, that some sort of onerous regulation like that, those judges are going to hear those cases. And although they're supposed to follow just the law, we know that judges are human beings like anybody else, and they think about what do we really want to have as a society. So I guess I would conclude by saying, like, I'm very optimistic that in the United States of America, eventually things are going to err on the side of liberty and freedom. And I think you've seen in particular with the court cases that have come down in the last several years in particular, that judges are not hesitating to put down decisions that curtail legislative and executive overreach. And I think that's going to be true in Bitcoin as well.
I hope you're right. You're making me feel more optimistic, because I have had a lot of guests who view the world as one that is descending into more chaos and loss of freedoms. And I'm sure you call them doomers. Maybe that's the case. And I do worry about that if we got into a situation where the U.S. was under threat, not just maybe from a military standpoint, but really economically, their position as the global superpower, what lengths would they go to? And I some people think maybe confiscation, but they didn't really go door to door, right? When 6102 for gold was enacted, they didn't actually confiscate everyone's gold. People turned it in. It would be very hard to do that with Bitcoin, especially when you can just memorize 12 words. But I just do wonder, what is the worst case scenario, and how do people best protect themselves? Because there does seem to be more of an attack on privacy tools, on coin joins, things that, I mean, you're not using the Bitcoin for nefarious activities. You just don't want anyone to find out how much you have or what you're necessarily doing with it for just privacy reasons.
So, let's talk about a more sober assessment, right? If there were issues that I think the government's ready to go to the mat on and fight extremely hard, what you just mentioned is it, right? The issue of being able to trace, monitor, detect, those are issues I fully expect very tough cases to be filed in the years ahead. And what I've always said is, like, if you're going to be engaging in those activities as a developer, as a business in the United States, you should be fully prepared for rigorous scrutiny from the United States government. Any efforts to obfuscate or obscure transactions and hide privacy, I fully expect cases. The government is just never going to bend on that for many reasons, one of which they will claim is national security, but also taxation, right? They want to be able to capture the money that they think is owed to the government. So I don't expect any even some of the more favorable friends of Bitcoin, right? They're not going to be seen as backing people trying to hide transactions. And don't get me wrong, like I believe in privacy. I think that the developers doing and making those tools, it's very valuable, right? But I'm just telling you from when I'm advising clients and talking about risk vectors, right? The issues related to what you just talked about, mixers and anonymizers, those are sort of issues you really got to be sensitive about. So I think you're exactly right here. But just to go back for a second, right? Our system is built in many ways to anticipate overreach by the government. That's why we have checks and balances, right? We know you could get a bad president in there that's going to reach too far and try to be a tyrant. That's why we have the court system. That's why we have the Congress, right? That's why there's the separation of powers in general. We know the same thing can happen with the Congress, right? You can have a Congress that passes unconstitutional laws. There are laws they have passed since the beginning of the country that courts have struck down, saying you're exceeding your enumerated powers under the Constitution. So that's kind of like the way the system is supposed to work. And for the people that will point to, well, the government did this during COVID, they reached too far, they suppressed your liberties. That kind of happens every time there's a crisis. The Japanese internment camps in this country where they hauled people in, they said, without any due process, we're just going to confine you because we think that there's a war going on. This is happening routinely through almost every decade. The beauty of the American system, though, is that although it can be painful to people in the short run, Americans always eventually do the right thing in the long run. And if you look at some of the things that have been put in place, even very controversial things like the mask mandates, right? Courts struck those down eventually. A lot of courts came in and said, you're exceeding the authority you have, and we're going to pull it back. That's kind of how the system works. So yeah, I do push back against the people that are negative, because I think in the long run, we're going to be able to put in place better rules, and the bad ones will be struck down.
But aren't there a lot of blurred lines when it comes to even like the spying agencies, the Patriot Act, what's been done?
Yeah.
We think about Edward Snowden, and he still is very active online, sharing how much overreach is still happening and how much we're being essentially surveilled and monitored. So it's like, well, where are the courts there preventing something like that?
Yeah. I mean, listen, privacy is one of the pivotal fights of our time, right? You're
Yeah.
not going to get me to say it's not an issue. Like, I'm not going to come up here and tell anybody listening to this that, oh, don't worry, you're not being there's not mass surveillance. Don't worry that tech companies have such a power to censor
Yeah.
and shut you down. I fully agree with all that, right? But the notion that these aren't problems we can solve is what I reject. Okay. If it takes new legislation to put in place people to have greater rights with respect to their data, greater rights with respect to online platforms and who can be turned off and who can be censored, let's get the legislation. Let's get leaders elected that can fix those issues. What I don't understand is why people have this view that these problems are somehow unsolvable.
Yeah, no, I understand. When it comes to privacy tools for Bitcoin, I think of something that Michael Saylor said that really resonated with me, and that's a reminder that Satoshi created Bitcoin. He created a way, and then he gave it away. And a lot of these developers, they create businesses essentially and extract profit from a lot of these privacy tools, whereas it really should be open source. It should be ethically given away. It truly decentralized, not influenced by anyone, no one profiting from it. And then maybe we could have a privacy tool that essentially no court can strike down. Do you agree?
Yeah, absolutely. So I said this when Samurai came out, right? So here are some of the facts as alleged by the government, and keep in mind they're allegations, right? In the case of Samurai, they said that the company, offering their service to for the coins, for the privacy, they're based the Whirlpool, I think it is. They made profit to the tune of about $1 million or more, and that there were direct communications where they were apparently communicating with individuals, again, allegations that they were helping people try to obfuscate transactions. And apparently they were talking to an undercover FBI agent, right? Not a smart thing to do if you are, in fact, trying to build out a piece of software. But to your point, right, profiting from that activity, that is sort of a real threshold question that I think would totally change the analysis of that case. If you and again, I've asked people that are smarter than I, maybe some of your guests that come on in the future that are more tech savvy, you can ask them, like, one of my issues is, can you build those types of protocols, or things like Whirlpool, can you build them without extracting a profit? Now, some people I respect have told me, no, you can't. That to build that transaction, you actually have to somehow, extract a fee or some cost for the economic transaction. At least that's the way it was explained to me. But it would be, to your point, if these things just ran on autopilot, if they were truly decentralized and they couldn't be interrupted, that would be probably the best place legally to be. And by the way, that's how Bitcoin was set up, right? It was supposed to work without any one developer. This is what I think is always funny, just as an aside, in the altcoin space and crypto, they'll point to these things like Uniswap and other companies like, oh, it's a decentralized exchange. But there are like a few choke points you can go after to shut the whole thing down. Like it really isn't decentralized. I guess you could say there are decentralized aspects to it, but if there's someone you can haul into court and then the thing stops working, that's in my mind, that's like the decentralization test. If I can shut down a front end server or something and then you lose 95% of the traffic, that's not decentralized.
Right. Great points. And I will try to explore that, and I'll see what guest I can have on that can maybe answer those questions. All right. Well, as we start to wrap up, anything maybe we didn't cover more in depth that you wanted to touch on, or anything you want viewers, listeners to know?
No, I mean, I think that to me, the big news that we're going to start increasingly focusing on over the next several months is this issue with the presidential campaign, which we talked about a little bit, right? I have some friends that come from a background working in politics. I can tell you that they are increasingly basically they're convinced that Bitcoin and crypto are going to be driven home on the stump, in debates, in other commercials and targeted audience as an issue for this election. It will be a wedge issue. I think there is some belief in the Trump orbit that it can pull some younger voters away from the Biden base, right? And they have data, I guess, to back that up. I don't think it's a mistake the way this has played out over the last several months, where it all started with this guy, I think his younger kid, it's like a Zoomer or something in Pit Vipers, I want to say, and asked Trump a question.
Yep.
You know what I'm talking about? That
Yep.
he's like, what's your stance?
Yeah.
To me, like observing that felt very forced and planned. And then all of a sudden, then you've got the issue with the bills that Congress is passing that are more pro crypto out of the Republican House, where they're trying to highlight that contrast. And I think probably from covering politics and being around that elections are all about contrast. You're trying to contrast one side versus the other. So from my standpoint, like there's clearly an effort to contrast. We're pro crypto and they're not. And that, I think, it did have a role in potentially affecting the SEC to let for the Ethereum spot ETFs. I think legally it was always going to come, but I think it accelerated the pace.
Political
and there's been
pressure,
other little and there's been other little overtures by the Biden camp to try to be more open and more willing to talk about it, which is really extraordinarily bullish, right?
Yeah.
And what I think is going to be fascinating is if Bitcoin does what a lot of the bulls hope and is surging in the fall, and people are talking about it and talking about these issues, and you've got one president saying, I want to mine all the Bitcoin in the United States, or presidential candidate saying, I want to have all the Bitcoin mined here. That's going to change the national discourse. And I don't remember any time in Bitcoin where there've been mainstream actors as big as the president and presidential candidates talking about it to this degree. So I'm interested to see what the market does, because that's different. You're moving from an idiosyncratic sort of anti-establishment asset to more of a mainstream asset.
Right. And calling out Bitcoin by name.
Yes.
Bitcoin specifically. No, it's been really inspiring to see. I don't know what to expect for this election. We're just around the corner from the debate. Will it happen? I think it will. But I hope Bitcoin is mentioned. And it's wild to see how far we've come in 15 years, and yet how much further I know that we'll go. So we're still early. Joe, this was great. I hope to have you back on. Thanks so much for sharing more of your insights and clarifying some of your views. Hope to have you back on soon.
Yeah, thanks for having me. It was fun.
Thank you so much for checking out this episode of Coin Stories. If you're listening on the Fountain app, you can show your support and share your thoughts by sending a boost. Last month's top episode was with Michael Saylor at Michael E. Sparks, boosted 777 sats and said, "We're still early." Another popular episode was with Ed Dowd at Justin Affronti, boosted 500 sats and said, "Paul Ryan actively talking about US CBDCs, and some folks think it won't happen in our lifetime. Gradually, then suddenly." Great job, Natalie and Ed. Thanks so much, Justin. I love reading and replying to your boosts, so download Fountain on iOS or Android today and make sure you're subscribed to Coin Stories. This show is for entertainment and educational purposes only. Nothing should constitute as official investment advice, and you should always do your own research. My inbox is open if you want to share feedback or guest suggestions. Just reach out at Natalie@talkingbitcoin.com. I'll see you next time.